Everyone checking to Market Think Tank, hello to bullish market and hello to S&P 500 index. Since the start of the year, we have got a bullish market which made the bottom back in 2018. The bullish momentum is continued. We got a very good bullish market so far. Breached some short-term resistance line, trading above 200-day exponential moving average line, and momentum is not stalling at all. What is going to happen in S&P 500 index in next couple of weeks? Let's check out technically. So today is 12th of February 2019 and market is trading above 2730 levels. The high that we touched in October of 2940, market fell off a cliff in three-wave structure. First one down here, then here, and then went to make a low below 2400. Since then, we have got a very massive recovery from the lows. It is in fact in a impulse structure 1, 2, 3, 4, 5 that I discussed previously. It's a very obvious impulse structure, and as we have been acknowledging the fact that the current decline, which is a three-wave decline like here, is a corrective structure. And following the three-wave decline, we have got an impulse structure 1, 2, 3, 4, 5. The recent acceleration on the upside is impulse in nature 1, 2, 3, 4, and within the fifth we have some minor degree of impulses 1, 2, 3, and market is now making the fourth wave. As we know for the fact that the current structure is not that simple. We got initially three wave of decline A, B, C, and then we are getting impulses on the upside, which is 1, 2, 3, 4, and market is right now in the wave 4 and probably will go up in wave 5 from here onward. So we got a three wave decline and then impulse structure. So we need to figure out what is actually happening. Perhaps S&P is going into the consolidation. We got a three-wave decline and then upward acceleration in impulse wave. So we need to see, since we made our 2940, we made a high of wave 3 of a larger degree. So we are down in wave 4 possibly. And within the wave 4, we are down in three-wave structure A, B, C so far. And since then, the acceleration is in impulse move. So perhaps the recent acceleration can be wave A of the ABC pattern. So we might get a 3-3-5 structure, as I discussed earlier, which is a flat formation. In a zigzag pattern, we need 5-3-5 structure, which is not the case right now. The first leg of decline was in three wave A, B, C. So we need to go for the other alternative, which is 3-3-5 structure. And within this 3-3-5, market just completed first leg of 3A, and then now probably going up in wave B. As we can see, this is the long-term chart as I discussed earlier. We can easily see on the larger degree since the bottom of 2008, we are getting a very clear impulses. First one here, 1 and 2, and then I am assuming this is the 1 and then 2 again. And within this impulse wave, we are completing wave 3 up there. So probably it's the matter of time we will decide which degree of wave 3 is completing, but for the time being I am assuming this whole move from the low of 2009 is going in impulse structure. So first we got 1 2 3 4 5 down here completing wave 1 and then wave 2, and then within this wave 2 we are getting extensions of 1 2 another 1 2 which is completing just here 3 and 4, and for this 3 we are completing down here. So right now we are in wave 4. So within the wave 4 we got this 3 wave structure ABC, then we are getting impulses 1 2 3 4 5 as I just discussed. If we go into the daily chart we can easily look around. The current move is impulse 1 2 3 4 5, and within this impulse this is 3 to 4 decline, and within 3 to 4 we are getting a minor degree of impulse decline in wave A, which is 1 2 3 4 5, and probably wave A is completing down here. Then we are going up in wave B, and then we will come down again in wave C, where we will complete 3 to 4 of this current bull setup. On top of it, if we add 200-day exponential moving average, we will find a very interesting reading. Market is just trading above the 200-day exponential moving average line. Have a look. Market is just trading above 200-day exponential moving average. One important thing I would like to highlight here, the important characteristic of Elliott wave theory is that we are completing wave 5 just here. So after completing wave 5 we can anticipate a counter trend, which will be a 3 wave decline in a most simplest form. So if we apply Elliott wave guideline, that tell us a correction is coming till the wave 4 of the last degree, somewhere here. So as soon as we get this 5 wave completion, this is what we can anticipate from here onward. This is the wave 4 of the last degree. Another thing I would like to highlight is the current setup will complete. We might get the correction in wave B, and after that we will get wave C on the higher degree. As I said in my last video, that the current correction can be 3-3-5 structure. So the first decline is in wave 3, then upward 3 wave, and then downward 5 structure. This 2800 level zone is going to be very critical. We will get a triple top sort of situation when market will cross 2800 levels. Also, if you just have a look on the current decline, this current decline is in 3 wave, and now market is going up in 3 waves, and after that we might get a 5 wave decline just like this. 1 2 3 down, 1 2 3 up, and 1 2 3 4 5 down. So if we just have a look of this structure, so what I assume that we are somewhere here. We just completed first leg, we are up here, we might anticipate a correction, and then 5 wave down. Another possibility could be the triangle correction pattern, which is 3 3 3 3 3. So every single wave is 3 wave, and it's A, B, C, D, E. So we completed A, we are somewhere in B, we will come down again in wave C, we'll go up again in wave D, and then come back again in wave E, and then we will go for making a new high. So this could be another alternative of the current setup, something like this. A, B, C, D, E, we will complete E, But this will be a long-term consolidation, because in ABCDE pattern, it will take some time. It is a long-term consolidation pattern, so the every move will be a three-wave structure. Three already we have seen. Then upward move will be in three wave, then again three, and then three, and then three. So A, B, C, D, E, and then final boom for wave 5, which will make a new high in wave 5. Another very important thing that I would like to highlight is, since the current decline is in three wave, it's A, B, C, so it fulfills the criteria of wave 4, because there is a guideline of alternation which says if wave 1 to 2 is in ABC, so we might get a complex correction pattern in 3 to 4. But in that case, otherwise, if it is not the case, so we can also get ABC in wave 3 to 4. So if it is wave 3 to 4, ABC has been completed, so the current impulse is the first leg in wave 5. So this is another likely scenario. We need to gear up with the possibilities of the different scenario of this wave count. So there are multiple scenarios right now. The two possibilities are, the first one is in a flat correction pattern. We are getting a 335 structure. Other can be a triangle pattern where we get ABCDE pattern. Otherwise, we could also assume that as an alternative case that the wave 4 has completed and we are just in the beginning of wave 5, where the first impulse about to complete. So the multiple scenario is going to be very critical to watch. In next few days, we need to look upon how the next few days is going to unfold. I'll keep you updated about any substantial development going forward. Stay tuned, keep watching Market Think Tank, and subscribe to my channel if you haven't done so far. I'll see you in the next video. Take care. Bye-bye.